Hi guys. All right. Again, we're here. Now, let's do backtest. This is another backtest video for what happened last week. And we're looking at VIX 51S index. Okay. So this is between the yellow lines is last week. And let's see why market had to move last week. So this, like I always say, these videos are for educational purposes, so that if you look at the history and the conditions of the market going back in time, you would learn better what to or how to act depending on what price bring up in the future, right? So this is back testing the previous week to see the conditions in which market moved and why market did move. All right, this is just what we're doing. I am using my own strategy. You may have a lot of other compounding strategies that you have for this, but I am using this because over time I've developed this strategy and I have also learned from prominent, successful, profitable traders. All right. So SMC is there, trend line is there, support resistance is there, but this is like a concise of what I see, right? This is just a combination of what I see in the market and how I view the market. So let's do a back test on VIX 51X index. Okay, so this was last week, right? Before now, this is a daily time frame. First thing we check for is the trend. We look at the zones. First, draw out your zones. I already had this place marked out. I had this place mapped out. I have to delete this. So I had this place mapped out. Sorry, justice. So I had this place mapped out already as per what I'm looking at. Okay. Yeah. So at this point, we had this zone placed here and this zone as well placed here. If you notice, market has been on a bullish trend up until this point, then it had to break the last low to a bearish trend. So market is bearish for now. Market is, as at this point, market is bearish. But then this high, which indicated like another, when you're having a bearish market, you have a high, a low, a lower high, a lower low, a lower high. So this lower high took out this lower low. It means it is valid, right? It means it is valid. But then what we have next is market then had to take out that lower high. So the change of character has been already indicated at this point, right? If you look very well, I always use the body of the candles. I use the body of the candles to indicate my zone. So if you look very well, you see how this line that I put, you see how this line, if you put it here, market actually broke above that point, above the body of this line. So at this point, the trading range and trading perspective at this point will be to look for an area of concentration here or an area of interest here where market will have to take it back up. But if you're trading this market, definitely, if you're trading this market, this is to indicate that market might reverse. So if you still want to hold this market as a sell, you'd have to wait for market to break off this low. Then we'll start looking for an area of interest to take it back down. But at this point, it broke off a high. So we're looking for an area of interest to take it back up. So as at this week, we don't know what market is going to do, but market is still kind of plummeting to the downside. It's still pushing up to it's still pushing down to the downside as at this week. So the beginning of this week now is what we want to look at. We have our zone stretched out. We have our trading range, which is between here and here, stretched out already. So we're looking at what is going to happen next. Where do we wait for market to come retest and push above? So initially we have this other block here, which is between here, but it's too wide, so I'm not going to leave it there. It's too wide, so I'm not going to leave it there. I just want to show you guys what I'm saying. So initially we have this other block. Yeah, initially we have this other block here, right? So where market came down, retested on the middle line and before shooting back up, okay? So this order block is still valid until we have a break of this low. You get, or market comes to invalidate this lower point. So that's when the order block is no longer going to be valid, because already we have a high that has been taken out. So market is bullish at the moment. So let me remove this, or should I leave it? Maybe I should leave it. Should I leave it? I don't know, but I don't want it to make my chart look messy on the lower time frame. But well, let's see what we do. So the range we're trading is between this range. If you notice now, you see how the range is all the way up here, right? All the way run all the way to this point. So it's between this range we are trading as our bullish range, where we're expecting buys from the market. So at this point, we have here, some of us would have even traded this thing as at the week before last week, right? We would have actually traded it. I think I did. I can't remember if I did, but let's see what we have. We have here on 4 hours, we have our fair value or imbalance area, right? We have our fair value or imbalance area here. Yeah, so we have that here. I guess that was why market moved in this particular place. Now, I guess that was why market moved, because then there was no trend. On a lower time frame, on a 1 hour time frame, there is a trend. There is a trend here. So because of these bars, but on this time frame, there's no trend. I'll talk about trends in my YouTube channel. I'll make a video about trends and how I look at trends. So, but for me, this close candle being this close is not a trend for me. It's just candle bar, week, bar up, bar down, bar up, bar down, bar up, bar down, bar up, bar down. So it's not necessarily a trend. I see this kind of structure as trend, not just bar up, bar down, bar up again. No, like it's consecutively comes down, it just comes down, goes up, comes down, goes up. So there's space in between. I see like a space in between. There's a space in between. There's a space in between. You get, so this is like the low. This is like a low. This is like a low, like that. So I wouldn't consider this now. I would not consider this a down, a break of this low here. No, on this time frame, I wouldn't. But maybe another time frame, on lower time frame, I would. But as it is right here, I would not consider it as one of those structures that I would want to look at. Okay. Sorry, I'm trying to write down this. So we're looking at what happened last week and what would have made us trade this pair last week. Okay. So we had that fair value gap there. We had this. Remember, our 4 hours order block is somewhere here. It's somewhere here. Yeah. 4 hours order block is somewhere here. So yep, somewhere here. Pardon me, I've not put these things together before now. So I'm putting it in your front so you see how I'm doing it. So there's another fair value gap here. Oh shit. Oh sorry. I hope they don't take down this video. I'm using some curse words and that's not good. That's actually not good. All right, so let's look at this. This is 4 hours. This is 4 hours. Yep, this is 4 hours. So, all right. Omo, my head almost. Oh shit. Oh, why do I keep using this word? I think I'll have to look for why editing this video. I'll use the sensor. I'll censor this part out. The part of me saying these things. Okay, so now we've mapped out our 4 hours order block and other areas of 4 hours on other areas like other blocks and imbalance areas. So when this market is coming down, we'll know where to take it. But at this point, we are on this week. We are on this week. We are looking at what market's going to do. Left for me, I wouldn't take this trade from here. I might actually take this trade for a short buy because it has interacted with this, right? For a short buy from here up until this point, and I'll cash out. But ultimately, we still have our zone. It has not taken out this high. It has not taken out this low. So we are still bullish ultimately, right? If this move here had this impulse move here, if it had taken out this one, this place, then I would consider it a correctional move. This would now be like a correctional move. Let me show you what I mean. We had this long, let me just start short. We had this, we had this, we had this, right? Now we're trading between here and here as our buy because there's a takeout here, even if there's a takeout here. So if we have something like this come up here, right? Let's say something like this come up here without taking out this high, right? We're still bullish regardless of whether we see something like this. We're still within the zone. So all these points may be inducements to come back and take people out as liquidity, maybe inducing liquidity. Do you get? So it may not exactly be ideal to change because you see something like this now, because you see something like this now. You are now moving this your area of interest, your swing point to this point. No, the main point we're looking at is between this point. That's like our daily trading range. Do you get? Now, if it's different from when you're now looking at a monthly or a 4 hours trading range. 4 hours trading range within this point is you're taking the trade as per maybe you're going down to a 1 hour time frame, you're taking it as per the different direction. But regardless, it is still bullish as long as it's within this space here, right? So I hope you get what I just said. So let's continue. So market did this. I would have actually tried to enter this because this is a retracement, and if you go down to a lower time frame, we would have seen a, let me see. Where was it again? I think it was somewhere here. So if you go down to a lower time frame, you would have seen this, and I would have seen this. I would have seen maybe market is retracing here. This was where it broke off from, or it broke off from here. So, sorry. So it's either I'm going to be, this looks like it's going to look, let me see for 15 minutes. Okay, yes. So this is where this market came. After it broke off from here on that 1 hour or 4 hours, this is where market came. So if you look at, this is like where your order block is. I will draw the order block here. So this will be probably why I would want to take the trade, because the market has actually tapped the order block. All right. And this will be, now let me show you something. Based on this, our rule, right? Let me show you something. Let me draw out this. This video is going to be long, but well, it's educational purposes. It's for educational purposes. So this is 15 minutes. This is 15 minutes. Right? Okay. So remember, we talked about our rule as if market trends there. This is where the full move went to, right? And this is where it started. So this was the first break. It broke, came back, broke, came back. Now at this point, it didn't get here. It's still the same, but we see a trend at this point. From here, we see a trend. Market broke high, made a lower low, a high, made a lower low, right? So we've been seeing consecutive breaking and falling down to that area. So we would want to wait for a break of structure and a retest, and the retest probably to continue. But if the break of structure takes it there, then fine, right? Then fine. But we are on this week. We are actually on this week. If I wanted to enter this trade, what would I be looking out for? I'll be looking out for places where markets did a confirmed break of structure. Now, at this point, market has moved out from here. We are no longer at this point here. We're here, we're somewhere here. So what do I need to see? At this point, this is what I will be looking out for. Rather, this is what market gave us here. There was a high that was created here. There was a high that was created here, right? Yeah. And there was another high that was created here, here. Yeah. So then, but the ultimate high, which is this one, which is created here, is where we later got a break of structure from. Yeah, this is where we later got a break of structure from. So market moved all the way from here, broke this structure and gave this high. So if you notice how these points became liquidity, here became liquidity, here became liquidity, even if there are some confirmed other blocks there, but these all became liquidity for the market to drop back, pick all this liquidity, tap in on this other block here. You see this other block here, tapped in on this other block here. Yeah. Yeah, you see this other block here. Yeah. And you see how after it broke all this high here, took this one out, took this one out, took this one out. So after it broke all this high, it came back on one candle straight down after the break and closed above. So if I had seen this hammer looking stuff, I would have actually taken the trade on the current week as a buy. But that's not the perspective I was looking at. Although if you are taking this trade, you would have still be profitable. Really, you would have been still profitable. You would have. This would have been like, let's say, whether you enter here or you enter at this other one, this is the full candlestick, this three, like a morning star, right? But me, I would have entered there because the rejection is so massive. It came down, it didn't even close below this low here. It just came down, tapped in on that place, cleared all these stop loss that would have been hanging here, then went back to close above the point. So I would have actually entered here. And if you had entered there to this point, that's 1:7, market would have given you a clean or given you one clean profit. All right. So my stop loss would have been here. Yes, my stop loss would have been here. So if I was entering this market on that Monday, the beginning of the week, this would have been the approach that I would use. I would still fall under this my rule, these rules, right? This chart rules. So, but let's go back to 1 hour. Let's go back to 1 hour. I just wanted to clear that out. So if I wanted to enter from here, like look this bias, 4 hours. Let's go back to 4 hours. Yeah. So if I wanted to look at this bias, I would have still like taken this trade. This would have been why I would have taken this trade when I see something like this. So what I went down to show you on 15 minutes, this would have been why I would have taken the trade. And the safest points I would have taken the trade from, that would have been the safest point. All right. So, but then market still came back down. We are still bullish. Remember from here, market still came back down, did all its thing, came back down. Now, this time around, it came back down, but forming a trend. If you notice what I'm showing you, it is forming a trend. This is a trend. It did this, created this low, broke the low, created this low, broke the low, created another low, broke it. Yeah, broke it. So you see, it formed a low, broke it, formed a low, broke it. So it trended down back to this area where we're waiting for either this to pick up or it's picking up this one. So after everything, this whole thing became liquidity for it. So it gathered this as liquidity, inducing people to jump in, jump in, jump in. It gathered this as liquidity too, inducing people to jump in. Why it's using this candle to clear everything. So, but at this point now, market tapped in on this fair value gap area, right? And tapped in here, but then it trended there. So we have to see a break of structure before we enter this market. And where I see a break of structure is here. This is where I see a break of structure. At this point, right? Because this was a high that was created, market took out that high. So between this point to where the market start reversing from is where I would call my 4 hours trading range, right? Between this point and that point, if you look at it well, this is the trading range. Sorry, I'm trying to pick this up. So this is like the trading range here, clone. Yeah, this is trading range. So we had this break. Now we had this full range to trade from. So we're waiting for somewhere around here. We are still bullish. Remember the overall move, overall mindset, overall culture of the market or structure of the market is still bullish at this point because of this break and this high here, right? We have our full daily trend as break. So we still have our mindset set on bullish move regardless. So at this point, market break here, we're looking at between here and here to take a trade, right? So let's see 1 hour, breaking it down to 1 hour. Where is it? Okay, this is it. Yeah, this is it. So at this point now, what would we say the market did? Did it trend? If you're part of those that said yes, it trended, then you're correct. If you said no, then you're wrong. Then you're wrong. All right. So this is the area, the 1 hour area of what do you call it? Break of structure. No, the area of break order block, OB, your OB area. This is your OB area. Yeah. So we had our 1 hour order block just below this point, right? Just above this trading range, right? So market went all the way between here and here. Now, when it was coming down, did it trend down? I would say yes, because this is a low that it created and later broke the low, right? This is a low that market created and later broke the low. So as long as we see, yeah, as long as we see this break, let me zoom in. Yeah, as long as we see this break, it came, created a low and broke it. So as long as we see this break, then it's trended there. Well, all we need to do is to wait for market to give us like a structural break, a break of structure. Based on this, if there's a trading structure, trending structure to the other block of Everly Gap Zone, then we wait to see if we can get a what do you call it? A break of structure before we continue to our traded direction, right? So, but then at this point, market gave you this as your first interaction, second interaction, like rejection confirmation, came there, rejected, came there, rejected, came there, rejected. So, but at this point, this was our first break of structure that we had. Here was our first break of structure that we had in market. Yeah, forgive my drawing this thing, it's looking, so this was our first break of structure, right? Market broke. So 1 hour trading range would be something like this, will be between these points. 1 hour trading range will be between this point because this was the low before we had the high here, right? This was the low before we had the high there, the low that caused the break of structure to this of this point, right? Let me set this well. Yeah. So this is actually the 4 hours point. Let me put this so we'll know. Yeah, this is the 4 hours point, 4 hours range. Yeah, this is the 4 hours range. Why this is the 1 hour range after we had a break of structure here. So on this 1 hour, we are still bullish because of this 4 hours range, right? We are still bullish because of the 4 hours range. But at this point now, we're looking at market just came, spiked in on this point and closed above. If you were the one, would you, and it came straight, you see how it came straight, tapped in on the same area. Would you have taken this trade from here? Maybe you would have when you see this 2 to 3 candle rejection, candlestick weak rejection, 1, 2, 3. Maybe you would have taken it, put your stop here, at this point or maybe below this point, but anywhere around here is still fine. This is what time frame again? This is 1 hour. Okay. So I'll put my 1 hour here. Yeah. So this is like your 1 hour order block, right? Yes, this is like your 1 hour order block. On this point, on this point, if I were to break it down again to 15 minutes, this is it. This is it. This is my 1 hour trading range. So if I'm to break it down to 15 minutes, 15 minutes order block to see where this market came and, reversed again. This is 15 minutes order block. Let me just stretch it out so you see what I'm seeing. It's 15 minutes order block. Okay, so you see, 15 minutes order block trended, also trended there. You see the trend. 15 minutes order block, after breaking this structure, it came trended there. It created a low, created a high, created a low inside it. So this was like the first touch, second touch, and broke the structure. So because it trended, we have to wait for this break of structure. It broke the structure, came back, gave us this perfect move, perfect entry. You would have taken this trade from here on 15 minutes the same day. What the hell, man? Okay. Yeah, and put your stop below this structure, right? I would have actually put my stop below this point. So your profit is 1:2, you see? It actually gave you a clear 1:2 before the retracement. Remember this channel, we always do 1:2, 1:3. So when you get the 1:2, it's perfect, right? And when market came back again, tapped in on the same zone again. This is not a trend. I wouldn't call this a trend necessarily because, I will talk about trend. I'll make a video about trends and different areas where I see as trend and where I don't see as trend, right? So I'll talk about trend. So, but then I wouldn't call this a trend. Market did the same thing, coming back to the same 15 minutes, tapped in on this and created a tweezer bottom, another position to buy, another place to buy again. All right. This time around, it's inside, so I will put my stop below this point, below the middle, or maybe at the middle, right? Or maybe at the middle of the 15 minutes order block. And market gave you, at first, it gave you a 1:2, then came back down to your entry before going all the way to where? Where did it go to? Oh, wow. This is massive. Before doing all of this, right? Coming back to your range. Remember this range? Was the range that we saw from the beginning of the week, right? Yeah, this was the range. So before coming back to your range and give you 1:9, this is 1:9 profit. So after catching your 1:2, you go in again. Once you see this again, you catch 1:9. Man, that's crazy. That's really crazy. Even if you don't catch this one, let's say you don't catch this one, but you see this retracement back down here, right? Coming back, there's a break of structure here. Market broke the structure and coming back to this other block. If you notice, there's another block here on the same 15 minutes. Maybe I'll draw it out so we would see it. There's another block here. Where is it? Yeah. There's another block here on 15 minutes. Yeah. There's another block here. This is the other block. Wow. Oh yeah. Yeah. So did I mark it? Okay. Yes. So there's another block here, this other block now on 15 minutes. So market came straight away after breaking the structure from here. You see why I use body. I don't use wick. I use the body break. Body close above its break, right? After breaking the structure, market came straight down, no trending. Gave this and gave this engulfing, right? If you had also entered on this engulfing, you would have still be profitable. Still here, stop loss would be just below this point, or since it's here, just you put your stop somewhere here. But well, let's be safe. Let's put it at the week of this engulfing, And let's take it high. Let's see how far it goes. It went as far as 1:6. Yeah, 1:6. So if you miss the other one, at least you caught a 1:6 ratio, right? If you missed the other one, at least you caught a 1:6 ratio. This one 1:2. This one 1:9, 9.5. If I don't think anybody will have the mind to hold for it to get to 1:10. But well, this is 1:6.6. So, however, this would have been a clean trade for you. So you see how we broke it down from 4 hours, where we had our overall trading range as bullish trading range. Then we started trading. You would have taken here probably, but I showed you my perspective if I wanted to take this 1:7, this trade here, buying to this point. Then I also showed you how market used here as liquidity, and market came down here. We are seeing all these things live here. You could go back to reverse. You can rewind this or go back to time, take this back, take this video back, and see all the things that I marked out here. So market came back to here, to this fair value gap area, and broke above it, coming back to your same range, your same high. This high, this range is here. This is from daily. We saw it here. This is it, right? On a daily perspective, the range is not here. The range is I think the range is here. I think we're actually correct, because what I feel is this market is still gonna go above this level, this resistance level, because then when he created this as the low, he created this and broke the low. So this which broke the low was taken out by this, making this now this high, this move that broke the low created a high, which broke this low as well as a break of structure. But then this became the break of the change of character area. So as this move broke that change of character area, it just gave us a bias that this is going to be a bullish move. We should expect it being a bullish move. All right. So if you have any questions, if you have a different bias from this, let me know. Or maybe there are other ways you view the market, but this is how I view the market, and this is how I backtest the market. So you make sure that you're from a higher time frame, we're doing a top-down analysis. So from a higher time frame, we are having a directional bias before we get into the lower time frame, because things may get messed up if your directional bias is conflicted. If you're having both buy and sell, no, things may get messed up. You may not know where to buy. Market can always show you a direction. If you don't know where you're going to, market will give you a place to go so that it can take you out on liquidity, right? So, but then you gotta be careful and you have to follow this thing. So I hope this video is not too long, but I want you guys to follow me on this, and I hope you have a nice day. But do well to subscribe, like, drop a comment as always, and turn on your bell notification should in case I drop another video so you'd see. All right. So for now, have a good day and enjoy your weekend. Bye bye, guys.